just going live now in YouTube, so I was just going through everybody. Sorry about that. Already just just introduce you to Scott here and the live trading webinar, the education that we offer here. So let's. I do have links in here for Scott, so if you want to reach out to him, he does offer mentorship and education. Let's go through the disclosures so that you can understand what exactly you're getting involved with. It's rather important. Okay, so general disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. So know that. Our simulator is excellent, but it is still a simulator. Nothing can reproduce the real market. So the risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Scott, are you in here? You ready to go?
Hear me?
Yes, there you are. Okay, no, let's see, Joe, you should be able to hear me, the audio feed, so not sure what's happening there. And hold on a minute, let's get here to sharing Scott's screen.
All right. You got my
Okay,
screen?
yeah, we're all set to go.
All right. So I've been out for the entire week. Had some family stuff I had to attend to, so I literally feel like I've been gone for about 4 months instead of 4 days. But just catching up with where we're at here as far as bigger picture stuff. But CPI number came out today, and massive, massive buy ice here. I've never seen this much buy ice in one concentrated pop. You see down here at the bottom left, it's close to 7,500 contracts, 7,500 contracts. So that is like insane. And I had people in my trade
Scott,
room asking,
can you zoom into that and let's just look at some of the details where they're getting filled? This is amazing.
yeah, it's like I said, it's the largest I've ever seen.
Yeah.
I mean, it was a very wide zone,
Wow.
so it's really hard to trade off of as far as the way I trade with risk and so on and so forth. Because I risk ATR above the zone, I get in below the zone, so on and so forth. So I didn't trade this, but it's just interesting to note that somebody came in and bought this many contracts. And again, you never know what the reason is behind the buying. Are they covering? Are they hedging? It doesn't matter what the reason is. What matters is, and you're never going to know. Like unless you're God Almighty, you're not going to know, or you're sitting next to the guy or the firm that's doing this. You're not going to know what they're trying to do. What's important is the volume area, because there's two sides to every trade, and somebody here was selling it like crazy and ran into this buy ice. So paper's not always right, the big money's not always right, and then I actually have a distinct setup for that called broken ice. But it's just interesting to note that this many contracts fired off in this area, and then how the market reacts to this area going forward. So this is an area you can actually draw on your on your bar chart, which I'll do eventually here, just noting this ice because this is a bigger picture play, obviously. So you know we want to see over the next couple of days how this market reacts to this area. So what do you want me to show you, Bruce, here as far as the detail?
Yeah, where are they getting filled on the on chart there exactly? Because these are massive, massive positions.
Yeah, you
So
can
that,
see here 2,800.
yeah,
So again, this is all part of the spike. It's just a different view of it. 2,800 here, another 2,500 here. You can see the white line.
yeah, yeah. The white line. I mean, they're staying right. A few larger players staying right at the same area.
Yeah.
Interesting.
And then it came all the way down to here.
Can
So
you
yeah, this,
mark those? I mean, I know you mark these up. That's what you do.
right.
Uh, and because like retracements back to those levels, I'm just so curious about it. But anyway,
Yeah, I mean, I don't want to draw the actual zone right now. I mean, I don't want to draw the line. I don't usually do that, but you can easily see this line came across about 35.5750 for this first iceberg or the second one. Let's see. There's one up here right around 69, and then there's another one down here, 57, about 57. Again, you can see the white line there, and then yeah, I mean, I don't trade that particular way as far as exact price retest, but I mean, with my zones I do, but I mark this entire zone. So this entire zone is important. Again, it's hard to trade that particular zone as far as my methodology because it's just so large, but there's always something coming in after. So as we just heard, something just fired off, so we can trade whatever just fired off here. So you can see there's more buy ice coming in. This was not almost 900, right? So we can mark up this zone. This might get a little confusing with all these lines on the chart, but we'll do our best. So, you know, the new thing I've been doing is taking away the bubbles and bringing up this last traded price line. Again, I knew this was here a long time ago, and I took it off my chart when I was trading the stocks when I first started Bookmap, and I forgot about it. But if you go to configure visible components and pick this last price line, it'll show you the exact price to help you draw your zones way more accurately. I was drawing them off the bubbles, and that is obviously not correct. It's the center bubble. Center of the bubble is where you should be drawing it. But when you see the price line, you can really zone in on where you're drawing, right? I'm just drawing all the prices that occurred in the spike, so that was the top of that zone. And then when it dissipated, it came all the way down to here. As my price on here. Yeah, right about there. Use my hotkeys more. So I'm going to change this color too because it's the same color as that big zone. Then we can make a decision here if we're going to trade this or not. All right. So that is the most recent setup that we will trade off of potentially. So I have a distinct rule. If you see these internals right now, the ADD advanced decline line, well, it's actually above, it was below 2,000. It opened up very deep, minus 2,500. All this is showing you how many stocks are advancing versus declining in the stock universe. It's 5,000 plus stocks. When you get, you know, minus 2,000 or more, that is like a trend trend down day type of day. So when you get days like that where it stays below this 2,000 line, and you can see it's already recovered it, but I can take both sides, both trades now, long and short. But if it's below this, I don't take longs because that's a trend down day, and it doesn't mean you won't get pops, but they'll be very short lived, and then it'll make it like a lower low. The bigger move is, you know, to the downside. So, you know, you can take longs in that situation. I just, over the years, I've just found out it's not worth it. You're better off just looking for one side of the market, and that would be short. And then also when the ADD is plus 2,000, you want to be very careful in taking short. So this has recovered back above the minus 2,000 line, so I will consider taking longs as well. And the other thing you want to keep an eye on and internal wise is the NYSE tick. I got both ticks here, NASDAQ, NYSE. You know, when you start seeing extreme tick readings, that just means there's program buying and selling, meaning the big money, the funds are liquidating baskets of stocks. So you just want to be careful when you see this thing. Let's see what this was. Why can't I see this price here? No. Yeah, you don't see this very often. So, I mean, granted, it was right at the open, but this is noteworthy, especially if you start seeing values, tick values, like if we come back down, you start seeing minus 1,300, minus 1,400. That's extreme, and that means this program buying or selling. You do not want to be trying to catch a falling knife in that situation. So, right now, it's trying to recover. You see this ADD is popping up. VIX is actually dropping. This is just a synthetic over here on the right of the, the highest weighted stocks, the FANG stocks, whatever they call them nowadays. But it's just more of a synthetic type of view of the market. So it looks like we're recovering right here. And remember, in the back of your mind, you got to, so we haven't moved out of the zone yet, but overall, somebody bought a boatload of contracts. Again, we don't know exactly what they're doing, but you assume they're going long, right? So you don't have to assume that, but that's what my feeling is here, especially if this market can hold. I mean, it did go a little bit below that area, but again, bigger picture, this could be the area that stops this downfall for the time being, meaning the next few days, weeks, so on and so forth. So, all right, so the way we're going to trade this potentially, ATR is extremely high right now. You can see right here in the middle of my chart. This is just the Wilders 5-minute default ATR and thicker I don't mess with stuff. This is perfectly fine. It's a 14 period ATR. That's what the Wilders is. It started out when it first came out, it was like a daily ATR, average true range. But it applies to all time frames. So I use a 5-minute ATR for the shorter term because I am a day trader, obviously. So 13.11 is your ATR. So I have this new spreadsheet in my trade room that gives you, we have a more of a shorter shorter term trade that we're working on. That's a lot more involved, where it's not, sitting in positions, and then I have my position trading strategy. So down here, I can input my zone value at the ATR, and it tells me exactly how many ticks I should be trading, or how many contracts I should be trading based on my account size, so on and so forth. So, first and foremost, we got to figure out the zone prices. So getting stuck right in the middle of the zone for the time being. Top of the zone was 56.75. So I plug that in. 30. And bottom of the zone is. So if you guys have watched my webinars before, I was just doing this by hand and estimating ATR and how far from the zone. Now it's an exact price. I don't know why this isn't exactly on the price here. Yeah, 47.75. 35.47. And our ATR is pretty close, 13.11. So we're doing the position trading strategy on these webinars. So I already see here, this is extreme risk, right, for the way I trade these. We'll go over that. 37, so close to 38 points. I don't have to guess remember, if you're risking more, you've got to cut down your contract size or you're going to blow out your account. So you should only be risking 1.5 to 2% of your account size on every trade. So this is giving me, you can see here, this is all, we plug all this stuff in, account size, how much you're risking. That means per trade I can risk $3,400. That means I can only put on 1.8 ES contracts, round up to, to be a little more, so I could put on a 2-lot if I take this trade. So that's first step to figure all that out. We're still in this zone. You can see what's above here. Lots of liquidity came in right after that number. So I consider this longer term liquidity. We talk about this basically every webinar for 3 years. This is not, newer traders that don't know what they're looking at here would look at this and like, wow, look at all these sellers up here, I want to go short. It's the exact opposite. This is like a magnet. This is the big money. They will get this market up to this price eventually. It doesn't mean it's going to happen right this second, but it's just good to know when you're coming up with your thesis for the day, where you look at your charts, and if you understand the bigger picture structure stuff, we'll go over that. But then this is what really drives the market, the volume. And you can see somebody wants to get filled up here. The longer it's in here, the more they want to get filled. I always use the example, say something comes out, it's not usually on the positive side, but say something comes out, say Russia, Ukraine have a peace treaty, right? The market's going to rip. Well, if this is just sitting here, they want to get filled, right? And so that's how you have to view it. And they will get filled because they are the big money. They are the players that push the market around. And I know this because everything I do in my trading is based on when I was a large scalper, right? So I used to trade 50,000 round turns a day in and out of the market. So all my setups, everything that I note in these markets is based on my personal experience. So it's not hypothetical stuff, right? So the reason I know this, because I used to play this exact game. I used to put, back in the day, 1,000 lot or whatever, 1,000, 2,000, and then I'd wait for the market. I'd start accumulating a little bit, just to see how the market would react. I'd buy like 100, and another 150, and then I'd see if the market was responding or not. Or say I started buying right here, and I saw the market was doing this. I'm like, okay, there's no sellers, so I'm gonna keep buying it. And then the closer it got to my order, I would really step on the gas and say I would be long, like 1,800 contracts, and I'd have 2,000, a couple different prices stacked up here, 1,000, and the market would just rip right into my offers. I'd be out of the trade, done, right? So in the very basic sense, that it's the same game today, right? And again, I was big enough, so when it did get, I had enough size that I can trade up to 3,000 contracts. Once it got close to my offers, I would just buy whatever was there, and it would just, and then you got these guys that jump on your coattails because they see the buying, right? And they would just run it right into my offer. So that's the game that's being played. If you understand the game, you can come up with a thesis for the day using the liquidity and the bigger picture stuff. So this is not the volume I take or the liquidity I pay attention to, right? This is algos, right? So this is just putting it in, pulling it, putting it in, pulling it. I want to see longer term liquidity, to understand which way we're probably headed. And again, it doesn't mean we're going there right now. It could be like make a move back down here and then hit it. But I'll bet anything by the end of the day, this liquidity is filled. And it's not even that far away. So anyway, back to the strategy trade. We have our zones. Let's check you guys all know I use the Ludwig levels. These things are incredible, especially for day trading and with Bookmap. So you can see we're below the yellow lug right now. So for me to take longs, if we're below the yellow lug, my setups, I need to see a full ATR, a retest, and a failure, then I'll go long. So that's what I need to see on this particular setup. So you can see here, we can't even get an ATR out of here. We're at 57. ATR is, again, 12.84. So that means I need to see 13 points out of this zone. So I need to see the 70 area, and that's right where the liquidity is. So I would need to see this, and then back out of here. Then I can trade it, and my stop goes a full ATR below the volume event, right? So that's on the long side. The short side is still in play as well here because we never got an ATR above this zone. So now because we're below the yellow lug, I will take this short aggressively, meaning the second we get an ATR out of here, I will go short. So we can probably set that up here. Again, I can trade two. Just want to make sure I'm keeping up with this ATR because it does change, obviously. So almost two contracts. I'll just put on two because I'm not trading micros on here. I could short it at 35.34. I round up, so 35.34 quarter, and stop out at 35.70 half, right? And I know that's a lot of risk, but this is the volatility. You have to adapt. You can't just trade your normal. I like to risk 4 points when I put on ES trade. When the volatility is this high, you're just asking to get whipsawed on nothing, on these algos just whipping it around because the ATR, the volatility is so much higher. So this is, I don't like risking 35 points on trade, 36 points on trade, but the volatility tells me that that's what I need to risk to avoid the noise whipsaws. And every trader that's on here knows this game because that's all it happens. It goes on all day long. It's 85, 90% of the trade is this trade because 85% of the market is our algorithms, right? So the way I trade is to get out of, I force the market to get full ATRs out of the volume area to prove me wrong. And I avoid that as much as possible. So again, when you're risking that much, you just got to cut down your size. It's the same amount, risk reward, but you just got to cut it down based on the volatility. So I will sell this at 34 quarter. I'll put that in right now. Set a 2 lot. Up there, and if I get filled there, then my stop is up at 35.70 and a half. So we'll take a look at grains here too. So, I tell you guys all the time, you should not be pigeonholing yourself into one market. So when stuff's not going on in one market or it's dead, if you're just watching one market, you're going to be forcing trades, especially if you're trying to do this for a living. You got to pay your mortgage or car payment or whatever. You're kind of forcing trades. When you're watching multiple markets, you can especially with this strategy or this style, you can wait for the volume events. Like we heard, there's been a soybean and a wheat, and you can go over there and say, okay, well, greens are active today. I'm going to trade that since nothing's going on in the equities, so on and so forth. So you can see here, this is pre-market zone. I'm just going to get rid of this. And then any questions on any of that, Bruce, before I continue?
Yeah, I mean, on your volume dot settings, question just came in. I think you just use the default, right?
Yeah, I mean, I changed the color because I'm colorblind, so it's like red and green. I changed mine to red and blue. But other than that, yeah, it's definitely default.
Okay, and you're using the smart clustering, and you don't really, it's right in the middle. You don't mess with it. Maybe go to the studies configuration.
Yeah, I don't mess with anything.
Yeah, there you go. Yeah, so it's down a little bit. It's a little bit between, like about a quarter of the way on the smart clustering there, and that's it.
Can you
Volume
explain
delta.
that to the, because there's obviously new traders in there, explain what the smart clustering is as far as.
Yeah. I mean, it's basically a way of clustering by both time and volume. And it's an algo that can use both together. So if you have it all the way over to the right like that, it's just one big dot in the middle, basically, and it's by VWAP. So that's the most clustering. Yeah, don't use that. But
Right.
somewhere where it makes some sense for you. So that's should answer the question.
So what do you mean by it's by VWAP? That's basing it off of
Well,
VWAP.
if you click on right click on the volume dot again. Okay, and go to volume dot settings. Okay, and then go to not smart. Click on the smart drop down there, and then go to time, and choose 5 minutes. Okay, so now zoom out a bit. See how zoom out to because you got clustering on as well. So hold on. No, this should work. Every 5 minutes you should. Oh, don't put a deselect apply smart clustering on top. Deselect that. No, down
Right
below,
here.
down below. Next
Oh,
checkbox. There you go. Okay, so let's take a look at it. Every 5 minutes you're going to get a volume dot. Okay, so you can see it right now. Look at the big blue dot. It's outside of the last price. See how
okay.
it's not on it's not on the price. It's because it's the VWAP of the volume within the last 5 minutes.
Okay. Interesting.
So that's all it means. And we do that again and again on in many things. We use the VWAP. So just to be
Right.
aware.
Okay. That's interesting. I didn't know that part. All right, let's draw this zone. So you can see, you want to talk about this. A lot of people are having problems with the zones, right? All you do is you find where it spikes. You can see it started coming in here. So I want to draw the bottom of my zone, basically where this started. It started up here, but these prices came down lower during the spike. So I got to draw my bottom of my zone down here, in that line, right? And then I incorporate all the prices that occurred in this spike up until it stopped. And that was this top line right here. That's my zone. So ATR in here is currently, this is soybeans. Or no, that's wheat. Take that back. 4.40. You can see it in the middle of my screen there. ATR Wilders 4.40. So top of the zone was at 76 quarter. And we got up, I'm sorry. Yeah, 76 quarter. So that was definitely an ATR, right? So this is the pattern that I look for a conservative entry. We'll see where we are in the lugs, but I always, if we do this, this, and this, I'm going to go long. Right?
December iceberg sell RT 150 for contract.
And it's absolutely amazing how many times the market will get around an ATR and come back to the area. Right? So we actually have a strategy for that exact thing. But this is how I base my position trading. far as that pattern. I don't know why this disappeared. One second. All right, we'll talk about this edge later, but it was extremely oversold, and that's why we pulled back, and that's why we got that rally. We'll talk about that if it comes up. Let's go to the lugs, wheat lugs. Why that always happens to me. There we go. So we are below the yellow lug. So even if I was going to go long that setup, I needed to see the ATR retest. So I could go long this now because we're below the yellow lug. I don't take longs aggressively. So I don't know why that's not switching colors. There we go. So if as long as this doesn't get an ATR below here and this comes back out, I'm going to go long this contract. So let's just quickly. I'm kind of surprised there's nothing firing off after that in the other in the equity markets. Let's see, I did not get filled on this yet. Keep an eye on that. That's that short. Let's go over to wheat here. Put in values quickly. $876 quarters is the top of your zone, and 872 is the bottom. ATR is 4.67. This tells me now, and we're not doing the ATR in here. The strategy, we're doing the position strategy. So I can go long here. I can trade a 5 lot, round up 5 lot, risking. Again, you want your risk based on the volatility at 881 quarter. Remember, I round down to enter, and then I can stop out. I'll stop out at 867, right? So, or I'm sorry, 866 a quarter because I round down on my entries. So let's put that in. Trade 5. 881 quarter. So that's where I will enter that trade. As long as it holds this zone, right? So if it gets an ATR below this zone, this is disqualified, and the short's already disqualified on this setup because we did get the ATR above. So all I can do on this particular setup is take a long. If it does move below here, I'm not even considering shorts because, from watching thousands and thousands of these setups, I've determined or seen, if the market's able to pull an ATR away or more from these zones, because there's so many ATR algorithms out there, it's showing that it's got enough strength to get an ATR outside an ATR from the volume event. I don't mess with the other side of the trade, right? So that's just from watching thousands and thousands of these. And I talk about this every webinar. This is the science, right? The way I trade these is the art. You can have a different method. There's no disputing what this was in here, but if you want to trade this a different way where you say, I love the long here for whatever else you're looking at, you can just say, I'm going long the minute it gets out of the zone or even in the zone, and I'm placing my stop below the zone. I mean, you got to remember, this reason you're on this webinar is to kind of see how I do things from my experience, overall as a trader of 20 plus years of basically watching volume, millions of contracts trade, but also watching this for the last 3+ years and thousands of subs I've seen. This is the best way that I've determined to trade these zones to stay out of the algo nonsense, right? So, but again, this is the science. You can trade these zones however you want to trade them. This is the best method that I've come up with of watching it, and that's what I teach. That's what we do in my trade room. That's what my course is based off of, so on and so forth. So again, we have a new strategy in there, and it's a little more shorter term. I don't like to use the word scalp, even though that's all I ever did. And that's another point that I always make. If I gravitated towards scalping for a reason, I made millions of dollars doing it. So if I'm not doing it anymore, there's probably a good reason, right? I'd love to make millions and millions of dollars scalping again, but it's not possible that I've seen as a click trader going, fighting against these algos. I was one of the fastest in the world clicking a mouse, but once the algos took over in 2005, 2006, I wasn't as fast as a computer, right? And it took a long time for me to adjust to that and realize like this strategy just does not work anymore, right? So, or not strategy, but this method of trading doesn't work anymore. So it's either you keep, I like to use the analogy of a monkey sticking his finger in an electrical socket. He keeps figuring out it hurts, and he still keeps putting his finger in there, right? And that's how it was for a while, until I finally said, "Okay, Uncle, I need to change my entire, trading strategy." But again, like I say all the time, if I can't do it, not that I'm some god in trading or scalping, but if I can't do it, I think there's very few people on the planet that can click trade scalping in and out all day long and be profitable over the longer term, right? I mean, yeah, you can make money for days and maybe weeks, but overall, very, very difficult. I'd love to meet you if you can do it. Show me some results, and I'd love to meet you. Anyway, so that I don't like use scalping in the trading, but the new trade we're working on in my room, and it's still in test mode, but we're trading it because it's ridiculously accurate and profitable. But it is pretty raw. But it's more of a trade that you're like engaged. You got to be engaged. You got to be watching the ATR. You got to be drawing zones and so on. I mean, and really adjusting the trade. So for those of you that like to be engaged in your trading and not just sitting waiting for positions to play out over hours, sometimes that trade's definitely for you. So that's what we're doing in my room as well. All right. I got filled on wheat. So now I can put the stop in. I got filled at 881 quarter. I'm going to stop out at 66.75. So we will place that. And that trade is locked and loaded. So, if this starts ripping in my favor, I know some areas that I pay attention to, right? So, we talk about all the time. I don't have the document up, but it's part of my room as well. So we're talking about the trading in the zone. That's how we came up with this new strategy, right? If you're trading in the zone. Let me see if I can pull it up here real quick so I can show you guys. Any questions, Bruce, while I'm trying to find this?
Yeah, let's see here. Guys, I put a poll in, and just trying to get your feedback here on do you guys trade the grains, wheat, corn, and I misspelled wheat, sorry, wheat, corn, soybeans, and most people say no. Guys, this is
a huge mistake.
It's a big mistake.
my
really, really big mistake. To get out of the, know what you're getting involved in and limit it up, lock down, whatever. But these markets offer lots of opportunities, and you can see why Scott is trading them.
Yeah, soybeans is my best product, which is, it's not unbelievable, but guys, it does not matter what you are trading futures wise. It's volume is volume. There's still trader. This is all based on traders that are stuck, so on and so forth. So it doesn't matter what contract you're trading. The only thing you need to know are the thresholds for each market, right? So, 500 in or 100, 150 or 200 in soybeans is a lot. That's a threshold. That means nothing in ES. If I see a 200, lot iceberg in here, I don't even pay attention to it, right? So you got to know the thresholds for your individual markets. But once you know those, then you just apply the system to whatever you're trading. And drawing the zones when the threshold hits and understanding how that works. And it doesn't matter what you're trading futures wise. It's the same stuff. It's traders that you're finding volume event areas and you're trading off of that, because there's always two sides to the trade. And again, it doesn't always mean the big money, the hidden money. For those of you who are on here, I'm sure most people know what icebergs are, but I'm still kind of surprised some traders that don't know what that is, that have been trading for a while. These are just hidden orders in the order book. They are not showing this size in the order book. You can see, look at the size in here. Ones, threes. You think if someone came in here and put a 200, what would happen? The market these algos run away from the size when it's put in the order book. So that's why they have to hide their size, or else they're chasing price, right? So say you're a fund and you're trying to buy for a client, you throw a 200 lot in here and the market skips away 5 cents. And you're trying to chase it to get filled, and then you got to explain to your client why the hell you paid up 5 cents and the market just snapped right back, right? So this is a way for them to hide their size in the order book to get filled, right? So this is a good example here why I'm an ATR away from this volume event, because now you can see the algos are starting to take over, and it doesn't always do this, but it does many times. So it's like, I don't sweat it. Most traders are like, they'll get in right here. One, they're trading too big for their account, so they can't take any heat. And the minute they start seeing that, like, oh crap, that's my car payment, I'm out, right? You got to be trading the correct size first and foremost, like we've already talked about. But I don't let these algos screw with me or my position until it can show me it can get a full ATR below that zone. And then if it does, I'm wrong, I'm on to the next trade, right? So that's what trading is. And that's all we talk about on these webinars is, and here we go, here's the trade. This is in my room as well. This is an edge. Genuinely puts the odds of success in your favor. You can think about trading in the appropriate manner, the 5 fundamental truths. You can do everything you need to do over a series of trades. Then, like a casino, you can own the game and be consistent winners. So, trading is just probabilities. It is not, there's no magic formula, magic indicator ever, right? You may have something that works better than in certain market conditions than others, and so on and so forth. But if you have an edge and you use it correctly, right? So you can be the casino. We use the analogy of a casino every time because it's exactly what it's like, right? Casinos know over the long run, over a year's period, because of the math, based on their edge, based on the game, that they will be profitable. It doesn't matter if a whale comes in and smokes them one day or for a week and they're down a couple $1,000,000, they know over the year they will be profitable. It's the same if you know you have an edge trading. And I know this is an edge in my trading because I've watched thousands of that. Doesn't mean you just start plugging in some haphazard idea and start trading it, right? You got to back test it, watch it, and make sure it's profitable. But if you have an edge and you follow your rules every time, you will make money, right? It's just like a casino. You could be the casino if you have an edge that genuinely puts the odds in your favor, right? So odds of success in your favor. I know the odds are in my favor. I know where the volume events are. I know how markets should react to these volume events. And I put the trade on. I know where my stops are. I'm not changing stuff, right? I don't put on a trade, and as it gets closer to my stop, I'm moving it. I put it on. If I get stopped out, on to the next one, on to the next one, on to the next one. That's what trading is. You can think about trading in the appropriate manner, the 5 fundamental truths.
152 contracts.
I'll show you something here in a second, but the 5 truths. Anything can happen, right? If you have to internalize this, or you are never going to make money consistently as a trader, right? You might as well just stop wasting your time, go find something else to do, because it's not going to happen. Number 1, anything can happen. I don't care how great a setup looks. Anything can happen at any time. Any new information in the market can disrupt anything that you're doing. You don't need to know what's going to happen next in order to make money, right? You're never going to know what's going to happen next. You know if it's an appropriate setup with the odds in your favor, and that's all you can do. There's a random distribution between wins and losses for any given sets of variables that define an edge. It's the same with the casino. It's the same with trading. That's why you just keep putting them on if you have an edge and you have your rules. An edge is nothing more than an indication of a higher probability that one thing happening over another. Probability, not for sure. Nothing is for sure. No system is 100% ever in the history of trading, right? Every moment in the market is unique. So, that's another example he uses in trading in the zone, and actually he was using it in the grains, where some hotshot technical analysis guy came in and was showing this big trader that was kind of old fashioned, so on and so forth. And he was like trying to show him the market and what it should do. And he's like, oh, this is a great place. This is support. This thing's going to bounce from here. This is going straight up from here. And the big trader's like, so this is the area. We'll go there in a second. He's like, so it can't go lower from here. He's like, absolutely not. This is a perfect. There's no way this is going lower. He gets on the phone. He calls his broker, sell 50,000 bushels of wheat, and the market drops like 40 cents. Right. So anything can happen at any time, right? So that's the point. It's like, it doesn't matter how good something looks. Every market moment is unique. So if you can internalize that, then your expectations are, hey, I have my edge, but this one may not work. Just like what did I just say here? Most traders say you guys took that trade with me. You shouldn't be mirroring my trade. You should be learning how to do this for yourself. But if you took it and you just took 5 cents of heat, you're like, oh crap, I'm down, I'm out. And then what happened? Right? So this is the point. You are playing against algos. Understand where the areas are. Understand you have an edge. If you get stopped out of the next one. If not, you play the move. So we heard there was a new setup here. So what I can do now is I can trail my stop based on this new setup and possibly add to this trade, right? So first and foremost, let's draw the zone, then we'll get over to the ES. I have to cancel this in ES quickly because a new volume event occurred. So this is now canceled. And then we'll draw the new zone that just fired off. So let's draw this. So you can see here's the spike. Get your little crosshair up here so you can see. I got to just hover over where the spike and look at what price that was. That was right there. Hotkeys to draw your zones. So that was that. And was that up here. That's your new zone, right? So first and foremost, I'm trailing my stop based on this new volume event. Helps me control my risk. Now, I didn't trail my stop because this is another huge, in my opinion, a huge mistake traders make. I'm trailing my stop to break even. I'm not taking a loss on this trade. Well, what is the market? The market doesn't care that you're breaking even. The market cares about volume events. Right? So I'm not a believer in trailing your stop. Why would I trail my stop? Okay, that's moving in my favor. Why would I put my stop where I entered this trade? Like, what does that have to do with the market? It has nothing to do with the market. It has to do with my P&L. The market doesn't care about my P&L. The market cares about volume events. So don't trail your stop just because you don't want to lose money. You can do whatever you want. It's your money. But I'm telling you, what do you think these algos? You don't think these algos know exactly how traders trade, right? They know when the market starts to move one way, traders bring their stops up. What do? They come up, they stop the traders out, and then it continues. How many guys go through this every single day? Stop trailing your stop to break even unless there is a volume event. Now I had an event here. Actually, this is wrong. No, that's right. Now I could trail my stop based on something that happened in the market, not on my P&L. Right, so there's your most recent zone. Let's make sure that's right. Yeah, this was 100. So I mean, this was the threshold volume event. Whatever. I thought this is looking blue to me. I didn't want to make it blue, but hold on. No, we'll just leave it like that. So the bottom of the zone of this most recent zone is 880. Right, that's step number one. I know that I'm trailing 110% of an ATR outside of the zone. So it's 5.08. So basically 550 round up, 575 out of the zone. So now I'm going to move my stop. Remember, I was all the way down here to 5 3/4 points below this new zone. Right. So that was 6 was 74 quarter. I don't usually like stopping out right in the middle of zones. We'll just leave this in for now. But what I'll do is if the stop turns out to be right in the middle of a zone, I'll just put it just outside of it. But I don't want to risk another 4 cents on this trade. So if this market's able to come back and stop me out right there, then that's fine. But normally I'll put it out just outside the zone. That's the one thing that I kind of change rule wise, where I should be stopping out at the ATR or just outside the ATR. Well, in this case, it was right in the middle of the zone. I like to make the market prove it can come all the way back, obviously, one, and then get through the prior volume event too, right? So, but you've got to determine, hey, that's an extra 4 cents. I don't want to risk that, and that's fine. But you can't be, I'm not trailing it off of my P&L. I'm trailing my stop off of this volume event. Right, so now that's the one side of it. This looks really far. Yeah, that's right. Okay, so now this is clearly an ATR above this zone, right? So if this comes back, so you guys can hear all the volume events that are happening in these grains, right? And there's basically nothing happening in equities right now. So this is why you want to be watching other markets. Anyway, if this comes back, does this, then I will add to this trade as a brand new trade. Stop's going to go in the same spot, right? Just outside an ATR there. We'll let that play out. Oh, so what I was getting at with the trading in the zone stuff, as far as paying, you need to pay yourself in important areas as you're correct.
December stocks top by ES 618
All right, let's
contracts.
go over here first, because obviously not a lot of people are trading grains. They're probably like, why are we watching grains and not the ES? So I'm actually glad I didn't draw that last volume event, because now we have a new one, so it would have been obsolete anyway.
Yeah,
All right, I'm
Scott,
gonna get rid of-
we may do. I know you're getting involved in a trade here, but we may do a separate webinar in the afternoon sometime, and if you want to go over just trading grains.
Yeah, I mean, that's fine. It's exactly the same as anything else, right? But
Yeah, but there's
I don't make any exceptions because it's grains. I just wait for volume events and know my thresholds in those markets, and I trade them same
right.
exact way. But yeah,
Anyway, just maybe a Q&A, and because a lot of people just they shy away from it.
yeah. And like you said, you definitely have to know. Like yesterday, for instance, I think it was just, what's the date today? The 13th? Yeah, it was yesterday. There was a grain report. I think it was yesterday. Again, I've been out for 4 days, so but you've got to know when the grain. It's just like trading in unemployment numbers, so on and so forth. You've got to know when those reports. You've got to know the limits on the day, right? So I don't know exactly what they are right now. Speaking of which, maybe I should practice what I preach. I think it's like 50 cents in soybeans. I don't really pay attention unless it's up or down big, and then you got to go to the website and see, hey, what's the limit? Because you don't want to be. So say we go limit up, and you're like selling, and we go limit up, and then it just sits there limit up, and then it closes. Well, there's been days that the market's opened up limit up like 3, 4, 5 days or more. So you do not want to be stuck in a position where it goes limit up for you'll be done, right? So you've got to know those, idiosyncrasies of the grain markets, but overall is trade exactly like anything else. You just don't want to get caught in a in a limit up situation, or you got to know what the numbers are.
Yeah, and just to mention, that's just similar to, I mean, we see the same in the S&P with circuit breakers, etc. So it's the same concepts.
Right.
Just you have to know your markets.
Right. All right. So here's the zone. We got 35, 63, 75 is the top. 59, 75 is the bottom. And then we can figure out what we're going to do here. Yes. What did I say? Oh, and then this Monday was a holiday, so banking holiday. So the accrued number is today instead of yesterday. It's wrong. All right, 63.75 was the top of the zone. So that's our zone prices, top, bottom, and then we look at the current ATR. It's 12.07. Now we know our prices for the position trades, whatever way we're going to trade this, and still basically sitting in this zone. So let's check our lugs. I believe we're still below the yellow lug. And then we'll get into this too, paying yourself when when you're in important areas, when your trade's going your way, right? My ultimate goal is the red lug in wheat here, right? So that's up at 907.50. But there's other areas you want to pay attention to too, like these market profile composites. That's another important area. So, I mean, granted, I just got in this trade, so I wouldn't have been out here. But say this market comes up to here, well, that's obviously going to be before the red lug. But I will definitely take off some based on this market profile composite area. You can see that was where this market failed the other day. That's what you want to pay attention to when you're paying yourself. You can see here, it tried 2 different times the other day. It opened up outside. It actually just tried once, failed. So if this comes back up here, I'm going to be out of a couple of these. And then I'm ultimately trying to get to the red lug. That's my goal. Unless another setup comes in. That's right around 95.50. So we get up to 95.50. So that area is where I'll pay myself on a couple of these contracts. And that's going to be confluent with like the plus 2.5 standard deviation of VWAP. That's where these algos kick in. If you know these areas, That's where you starting to lighten up a little bit. VWAP, this is one standard deviation, otherwise known as daily value area. This is 1.5. This is 2. This would be 2.5. I just don't have the 2.5 drawn here. But when the markets get this stretched out from VWAP, you have these algos that snap it back. So especially if it's confluent with another area, you want to be looking to get out of some of your contracts. So that's what I will watch. All right, back to this. Let's see where the... All right, so we're still below the yellow lug. All right, so I will enter this short aggressively. That means I can get in at 46.50. I can still risk. I'm just going to risk 2 based on my account size. I'm risking 2% on the trade, 46.50, and I stop out at 77. That's risking 30 points. I understand that, but that's what the volatility and the zone size is telling me I have to risk, and that's why I adjust my size, right? So if I normally trade 10, I don't just keep putting on 10, risking this amount of points, right? You've got to adjust so you're not in every trade. You're just risking 1.5 to 2%. If you lose, on to the next one. You can take multiple losses and not blow out your account. Remember, this is a probability game, and that's all we're trading. Right, so we said 46.50. Trade 2. That goes right there. I will short that aggressively. Remember this liquidity up here too. So it doesn't mean, I know this is here and I know the likelihood of hitting this is very, very high today. It doesn't mean I won't take a short, right? If the volume event, the most recent thing that's happening in the market shows me short, I'll go short. But I do know there's very high likelihood we hit this. It could be, 3 hours from now. So I'll still trade it. But if say I get filled here and then I get short and then something comes in down here and I end up getting out and going long, well then I know, okay, I can use this as part of my target to the upside, right? It's just another factor that I consider with targets and coming up with the thesis, so on and so forth. Let's check the ADD here and see if we're... Yeah, so this has improved significantly. So I can take longs or shorts, like I said. If it's below 2,000, the 2,000 line, there's no longs. But this has improved significantly. You can see VIX is dropping too. Okay, so we're still bouncing around this zone. I'm not making any decisions until this can show an ATR below. I'll go short. To go long, I need to see ATR retest failure. And again, this is pretty close. It's not going to surprise me at all if this gets filled, in the next few minutes. There was something in crude, but I'm not going to take it because the number's coming out here in 5 minutes. But you can see here there was a volume event down here. This was threshold. My threshold for crude is 150. So if you were paying attention here, that would have been your zone, actually up there. And it looks like I got an ATR above there. More than an ATR above there. And now we're just waiting for the number. So I would normally withdraw that and trade off of it, but you guys have to be careful. You can have the best zones and the best looking trades, and then new information hits the market like we've been seeing every single day with 15 Fed guys talking throughout the day. It's insane. Today is actually like one of the few days that there's no Fed speakers. I tell my room all the time for both trades, the position trading trade and the shorter term trade that we're doing in there. When they're talking, it's new information hitting the market. So all bets are off. You can still take the trades, but don't be surprised if you get stopped out, right? It's like, if you want to be safe, just wait till they shut up, which is very rare lately, and then you put on your trades. But like, I'm not putting on a trade in crude 3-4 minutes before the number. I'll wait for it to come out, settle down, then new setups will come in, which they will, and then I'll trade off of those. But all bets are off if new information hits the market. All right, so this is still working, and I forgot to draw the soybeans. This is my favorite product. See here, this is significant. Sell ice. Threshold in here is, I have it at 150.
December stocks topped by NQ, 151 contracts.
We'll go there in a second.
December stocks topped by ES, 1170 contracts.
All right, now it's getting interesting. Hey, look at that. Look where we're headed.
TW, 165 contracts.
That's a new setup in week 2, so we'll go there to trail the stop. First and foremost, ES. This just fired off at 1,000 plus stops. This is now canceled because when a new volume event comes in, I just start the whole process all over again, right? I'm actually even going to delete this because something new has come in and it was a lot more on top of it. So you can see here, this is what's so great about Bookmap. You can see it on the on chart showing you 1,000. You come down here, it was about 1,100 total. All right, well, you can see the red line. It helps you draw your zones, so on and so forth. So we'll do this process all over again. I'm just going to draw this zone and then come back here, trade it because I got to trail my wheat because I obviously have a position in there. And then I definitely want to try to trade that soybeans trade. All right, so 150 is the threshold in wheat. There you go, 172. You can see this is actually one house that's been continuing to have sell ice from back here. You can see this black line, right? You got to be careful though. You know, when you see, for instance, you see it start here. Say this was like, 120 or something. Well, I'm looking for concentrated volume events, meaning you don't draw your zone this huge thing the whole time this has been coming in, right? Like, yeah, it's good to know this is one house, but I want concentrated threshold volume events. That's what I'm drawing my zones off of. So it could have been meaning, say one house wants to continue to sell, it could have been like 30, 50, 80, 20. Like that is not a concentrated volume event, even though it's one house. I understand that, but that's not a market mover. This is a market mover, right? So I draw my zone based on that, not all the prices that happened during this entire time that this one house has been trading this, sell ice. So hopefully that makes sense. Let's draw this and I can trail my stop.
Just to note, everybody, he's going through things pretty quickly here, and I'll just let him do it. We're peeking over the shoulder of like him, trading multiple markets at the same time. You can always go back and review. This is recorded in YouTube, and please ask questions in the chat in YouTube or in Discord. We can answer them there.
Right. Yeah. I mean, guys, even in my trade room, newer members come in and they're like, "Is this too fast?" You got to remember, I'm trading live, right? I'm not showing after the fact, looking back, right? So it's like it comes by fast if you don't know what you're looking at, but it slows down. Trust me. All right. I'm just gonna put an offer in here right around 95. Remember, we just talked about this area. It's almost there. I'm gonna get out of 3 of those there because I know that's such an important area. And so that's first and foremost. Actually, we'll go just a tick below there. And then I'll try to hold on for the red lug at 909. But now, once again, here's your new volume event. Bottom of that zone is 88 quarter. ATR is 5.37. So pretty much 6 cents because I go 10% of an ATR outside there. So I can go 6 cents below this zone, 82.25. So now you see I can now move my stop all the way up here. And it's based on a volume event, not on my looking at my P&L, right? So I would have added to this trade too if we would have gotten ATR retest failure, but it never came back to that zone, and now you have a new volume event. So I could add to this as well, but I know this is an important area. I know red lug's not too far from there. I'm not going to add to this. I'll just let this play out. So hopefully we can get the fill up there, and then we'll see. If not, I'm going to make a point or so on this trade if it comes all the way back. So now this is a break-even trade. And did I do it because I don't want to give back my P&L? No, I did it because there's a volume event. Like I say nonstop, the market does not care about what you want to lose or don't want to lose. It cares about volume events, so trade them accordingly. All right. I'm not missing a trade here. It looks like it's pretty close. Still below the yellow lug. What do we say our price was? Did I already put this in? No, I did not put this new volume event in. Sorry about that, guys. 68 quarter, 35, 68 quarter is the top of the zone. Right here, aggressive entry anyway. And then 60, looks like 35.65. I don't know why that's not on the exact price. I didn't draw the zone correctly. Right, so I can short this aggressively at 52, 35.52. I can put it on 2.2. I'm just going to put on 2. 52. All right, so I did not miss the fill there. So again, I'm doing the same thing I was going to do on that first stop when we just saw. All right, so That is 110% of an ATR outside of that zone. I'm forcing this market to show me it can get outside the ATR because so many times it gets right around an ATR and will snap back. These algos pick up these volume events just like we do, like Bookmap does, right? So if it can push outside of an ATR, I'll go short aggressively because we're below the yellow look. And that's the way I trade it, right? A bigger picture, I've been saying for weeks, this markets are in huge trouble. They just keep breaking lower. It doesn't mean you can't get these pops. This is going to be, speaking of zones, this was a zone from years, like a couple years ago, I think. So I'm actually going to delete this and I'm going to draw a new zone here so I know when we return to this area, there's an important zone. And that would be the gap down from today, right? So there's 4 important areas of charting that you want to pay attention to. Tops and bottoms of balance areas. Hold on. All right, so this was a balance area we broke down from overnight. Right, so tops and bottoms of balance areas, high volume nodes of balance areas. So, markets are in one of two states. They're either balancing or they're trending. So high volume node is just a general area inside where the most trade occurred, right? So if you're just doing that, that is usually where the most trade occurred. That's the high volume node. So I don't draw high volume nodes on for my zones because there'll be too much on my chart, but you can just eyeball it and you can see where they are. So anyway, this is an important area. I'm going to draw a zone because this is where we gap down. And I can promise you when it gets back here, you're going to get some kind of reaction. And if it goes right through it, that is incredible information. And that would be a failed breakdown of that structure. So really important area, not too far from here. So let's draw that zone and I'm going to keep an eye on this because if I do go long here, I'm going to watch where this thing gapped down from. So you can see this little bar, it closed here and we gapped down, we opened up down here today. Right, so I'm going to draw that zone. I try to draw them to where, current stuff. So if you see the line going all the way back, it's just from something prior, a long time ago. This is current, right? So and it was basically the bottom of this balance area as well. A smaller balance, couple day balance, right? So this zone is really important. If you just waited, if you understand how to draw these areas, like this zone I drew from this directional conviction up, and that's the third important area of charting, and then buying and selling tails is the fourth. But this was a directional conviction that led to this big up move. We came back down here, kind of traded through it, but then again, the other day, huge directional conviction, 40, 50 point move out of there. So this zone is still relevant. But anyway, we moved down, we built balance over a couple days, just gap down today. This is a very important area. My point is if you just wait for these areas to trade and that's all you do, and that's another reason to be watching multiple markets, you're not forcing trades in terrible areas. You just wait for volume events in these areas, you would be a highly, highly profitable trader. Most traders aren't that patient, but if you can be, that's the edge. That's just a addition to your edge, finding these important areas to wait to trade. So anyway, that's right around 35.85-ish is the bottom of that zone. Let's see what that looks like on. That's right around here. It's a little, red lug's a little lower. But say this thing pops up here, I know anywhere in here is a great area. Then you throw a lug in. I guarantee you this is probably the bottom of this balance or composite. Real close, right there, 92. So anywhere in this area is going to be a great place to trade. A failure if you get the volume event and it turns bearish, right? Because now you know the area, then you're getting the real-time volume confirming the area. There's no better edge in trading, period, ever. So those are areas you want to watch. And if you're end up getting long here, those are areas that I want to get out of some, right? Speaking of which, did I ever get filled on this? No, not yet. Now I got to get algoed for however many minutes, hours, but that's why I have my rules, so I don't panic out and FOMO and stuff like that. It's if it comes all the way back and stops me out, then that's the way it is. I'm on to my next trade, but I'm not like looking at it like, I don't know, I love this profit, I want to get out. I know my areas. If it gets up here, it should. If it doesn't, I'm out. If it comes all the way back, or if a new volume of that comes in. All right, so another volume event. This is interesting here.
506.
Hey, look where we're headed. So first of all, you can see this liquidity pulled, which is very interesting. Some of it was put up here. We just talked about this area. We got a volume event. This is go time, right? So first of all, the short is canceled because we have a new volume event. I'll try to get over to NASDAQ here in a second too. You had 1,000 stops here. What was this here? A lot of puking going on, right? Everyone thought this was the big one. And then once again, all the shorts get caught offside. So this was 1,100, 1,200, but this is threshold 2. So I'm drawing the most recent setup, right? So that would be this. Let's get this out of the way. You can see the swipe. This is a sweep indicator, part of Global Plus. Everyone always asks me, you know, what package should I get, regular Global or Global Plus? Global Plus has so much more, like, to help, you know, see, like, it has the sweeps indicator, the absorption indicator. Bruce can talk about everything else it has, but highly recommend that, you know, versus normal, because it also helps you draw these zones too. When you see these, you know, these spikes, when you see the sweep indicator, you can just come over here and start drawing the zone based on the bubbles, right? So this actually didn't get to threshold to right about there, so that's where I'm going to draw that, even though it did start here. I'm going to start it right there. You can see this is where it really spiked, and then right there on that bubble. So I'm going to draw the zone here. And on top of that, you just go to where it stopped or dissipated. That was up here. The zone. Do the whole process over again. And members of my room that are on here, I'm sure you guys are getting frustrated because we, you know, this the new trade we're working on. Like the minute a new setup occurs, you got to get out and draw it, redraw it, and, you know, pattern yourself to for the new trade. And it gets really annoying as it's like getting close to your entry and then a new setup fires off. All right, so this is right in the area we just talked about, right? Pretty close. So 92 quarter is the bottom of that zone. And I made a mistake earlier. The red lug is nowhere near. I was thinking this red lug was at this price, 35.77. It's actually 30. This is quite a ways away, but still, this is a very important area. This is where we gap down from. As you can see right here, right now. Really good trading area. No matter which way this breaks, this is a good trading area right here. Even better when you have straight beeline moves into this area has a very high likelihood of failing, at least temporarily, right? It's one thing when you come up to an important area and say we built balance here over a day or two and then come into the zone. Well, you want to be careful shorting that because you got all these loaded up traders that need to puke. This is a whole different situation. We just moved 100 points straight into an important area we gap down from, and with a volume event. So this particular trade, I'm going to be aggressive with. Even though we're above the yellow lug, I'm going to aggressively short here. I know it's where we gap down from. It's the bottom of this market profile composite. As you can see, this is an exception that I will take, and I will trade this aggressively. Did we just get a new setup here too? Yeah. This is a double whammy on top of it. What's a double whammy? It's the dumb money puke, the retail trader puke. Again, don't be offended. I'm a retail trader nowadays too. Into the waiting hands of the smart money, the bigger money. The reason they're smart is because they can trade bigger. Sell ice, right? So this is a double whammy. Let's draw that. One of my 6 setups. So speaking of which, Bruce, show you something here in a second. You will feel vindicated.
Oh.
You thought it was going to be bad, didn't you?
I thought it was going to be really bad, yeah.
I'm just going to change colors here so I make my stop runs white or yellow. But when you get a bunch in a row, it gets confusing. So we're going to change the color. I know this is annoying to watch me draw zones, so on and so forth. But the Bookmap developers are working on some hotkeys for the drawing tools, right? Right, Bruce? For the colors?
Yes, we're working on stuff for you.
Sweet. Okay, so here's our zone. Let's get this in first before I vindicate Bruce. The top of the zone is 86.50. The bottom of the zone is 83. 86.50 and 83.
Just a quick note here for everybody regarding Global Plus. This is kind of important. So yeah, you get a lot more in Global Plus, and I need to mention there's a few more that are coming out this month. So you get a lot more basically. Note though that Stops and Icebergs are not included. Those are sold separately on the Bookmap marketplace. So and the reason we do that is very specific. It's only for CME futures, group futures instruments, and you need to have rhythmic data. Sweeps and absorption work on all market types: crypto, stocks, futures, whatever. All right.
Right. So again, I'm going to short this aggressively because I know how important the zone is. It's a straight move into it. I can still only trade 2. I can enter aggressively at 68. We're going to round up at 69, 35, 69, and it's a 2 lot. Again, this was this area. It's quite a ways away, but is that right? 83. Yeah, because I'm going 10% of an ATR. ATR is almost 13. So that is quite a ways away. But that's what my rules tell me to do, and I just keep doing the same thing over and over and over. I don't one trade say, I'm just going to hop in right in the middle of the zone, right? Because that's just not my rules. And again, and they're not just fly by the seat of your pants rules. I've been watching thousands of these, and that's how I trade it. And yeah, like I said, you can say I love this area Scott just pointed out. I'm getting in short right here. I'll risk an ATR above right here. You can do whatever you want, right? It's your money, but I wait for this to show me it can get outside an ATR if I want to go short, right? If this area is so great, like I think as a failure, this should easily get an ATR out of here. Then I'm short. Yeah, I'm risking another however many points, but that's the best way I've determined to trade them, to stay out of this. Unless you like to be whipsawed all day long, then you might want to, try to adopt that style. All right. Let's see. There's some things in NASDAQ. Might as well take a look at that.
Guys, we put a poll in YouTube as well, and Discord. If you have a minute, we've only got 25 votes in there, so get in there and vote on: do you trade multiple markets at the same time like Scott? It's challenging, and anyway, it'll help us kind of gauge what markets to cover, multiple markets, etc.
Yeah, I mean, so first of all, something we just fired off. We'll draw that zone here in a second. But if you're watching multiple markets, you are giving, open yourself up to opportunity, like the sweet trade. So I just got filled on this, right? And we're real close to this red lug, so I'm going to be out at the lug here. So we got filled at that. Just quickly do this. Oh no, I'm sorry. That's at 907.50. So I'll let these 2 ride. But remember, I got out of 3 of them in an important area. I paid myself being right at an important area, so I'm out. If this makes it all the way up to 07.50, I'm going to stop. I'll put my stop or my limit order just in front of that, so we'll go 07. All right, because you can see it doesn't matter the product, it's volume, it's caught traders, so on and so forth. Right? And you just keep taking them, and you have your rules, and that's how it works. That's a trading edge, right? All right, so we'll let that ride if this comes all the way back, and/or our new setup. I think we already drew that. Yeah, we already drew this. That was this zone here. I mean, technically, I could go. I think I should have added to this trade. No, remember I said normally I would have added to that trade aggressively because we were above the yellow lug. But remember I said we were at this market profile composite, so I decided not to do that. But so I'm fine with this trade. So see, we get up to the red lug. All right, and yet another setup in here. So quickly before I draw this, just before I forget, let's get this out of the way so Bruce can stop gloating. So this was posted in my room November 15th, 2021. I really like Bruce's suggestion for naming the new setup Step Brothers.
Aww.
Ooh.
Aww. All right. I really appreciate that.
So you were right.
Yeah. I have to admit and vindicate as well. Like I told you about the shortcuts and everything, but then new functionality came out and I didn't update you on those new shortcuts. So you were right on that one.
Wait, I didn't even hear that because there's like 55 things just fired up.
Oh.
What was that last part?
No, that I updated you on the shortcuts early on, but then new functionality came out, and I did not update you on those new shortcuts. So you were right on that one.
All right, clearly, I don't mean to interrupt you, but something's going on here. First of all, look at the liquidity. This is how you know there's a news story out. See how this just went black? Something's coming. Something's happening here. I'm not getting anything on my squawk, shockingly. So if anyone knows what this is definitely news, right? First of all, the market just spiked 30 plus points. There's no liquidity, just pulled because of the news story. I have no idea what's going on here. I mean, I didn't have a trade on, but this is exactly what I'm talking about, guys and girls. Anything can happen at any time. Something just came out there. If you were short, you just took it on the chin. I mean, I can't even keep up. I'm just going to let this settle down. But you saw there was 1,200 stops, 1,800 stops. Now here comes some bias. Wow. It'd be great to know what the news was. That'd be neat. I mean, crude popped too. Crude had 500 stops. I don't know. Someone's got to know. Anyone know? Put it in the chat. That'd be great. I think my news service would pick that up. Here in a couple minutes here. Oh, the ES just moved 40 points. We're checking on a news story. It's very frustrating sometimes, but this is what I'm talking about, guys. You've got to be able to control your risk. You've got to have your stops. You've got to be, have your amount of points you're going to risk. And then, if something comes out just like it did, that's trading. These are markets. You get stopped out, you're pissed, settle down, on to the next one. Still not saying what that was.
No one yet.
No, I mean, even the squawk dude he hasn't said.
Huh.
Unreal. But like I said, if you're watching these markets, first of all, you don't see 40-point spikes in ES unless something's come out. But the way you really know is when all this liquidity gets yanked. See, it's starting to come back in now, but something just came out there. I have no idea what it was. We're always the last to know, and that's why we're the sheep retail traders, right? That's why the big money, there's the big money. They get the information. It doesn't mean you can't compete. You can sit here and complain all day long. I can't tell you how many. Still not going to say what it is. Still doesn't know, I should say.
Scott, can you check on the ES, like where you saw all those huge icebergs before buying? I'm just kind of curious with it in the context of relationship there.
Yeah, well, shockingly, they were right overall, right?
Yeah,
it went a little bit lower, and then, hey, so this was the zone right here.
Wow.
Basically 75 down to 35.
Wow.
Yeah. This is nuts. Something's happening here.
858 contracts. NQ December iceberg sell NQ 152 contracts.
That's nuts.
NQ December stocks by NQ.
Snake Eyes says ECB news. So might be interest rates news in Europe.
I would be losing my mind. Am I trading right now as far as bad mouthing certain news services? This is just, it's not acceptable.
Wow. 2.25% ECB. So interest rates.
That's a surprise, or was that? I mean, were they?
I don't know.
Wait, here, listen. Tough off, man. Honest to God, sorry. Trust me, I'm keeping it very PG. There's no catalyst that we can see. Well, first of all, no kidding. You're obviously not seeing it, and you're not reporting it. And these markets there's no catalyst. Market just, and how does someone in the room know what just happened, but the news service doesn't know what happened? That's disturbing. It really is. This is the kind of stuff that sets me off. I'm going to let this settle down, guys. I'm not going to trade this right this second. It's not acceptable. It really isn't. Right. So this market just moved. It's just popped 60 points. So was it a surprise cut? Bruce? Did he say what it was?
I mean, I don't see anything in the calendar, so maybe that's why it's such a big move. I mean, because it was not scheduled. I don't know.
150 per contract.
All right. Well, it is what it is. Guys, this is a perfect example. You can have the best damn trade on ever. It looks like that area looked superb. I couldn't wait to short it. But I was waiting for my volume setup, and it just never happened. This is another important area we just talked about. I'm gonna. Granted, this was a major fail breakdown, but this was again where that happened, where this happened. We're putting in a selling tail. Here's your volume setup. I will trade this. I'm rolling the dice because I don't know what the hell's happening in the market. But this is another good area. But the point is that first area was incredible. I couldn't wait to short it. But do you see the difference by having the volume? So I had my setup there, and I'm ready. I'm waiting for. I need to see my rules, and I never took the trade because they didn't materialize. If you were just trading off bar charts, you were just short there. You just got your head ripped off, and we still don't know what it was. But my point is, you don't have all the information if you're just staring at bar charts or whatever indicator you're looking. Unless you're looking at real-time volume, you do not have all the information. I don't care how great of a trader you are. You still don't have all the information. If you're a great trader and you use this information, then you're going to be, top of the line trader. I can't think of the word. Elite. Out of the zone. So disturbing that we can't. Well, we'll find out after the market was 100 points. Then we'll find out what this story is. It's the big deal. Guys, sometimes there's certain things that trigger me, as you guys have heard over the years. Stops to the tick or fills to the tick, and then the market rips you. I mean, it happens to everybody, but it happens to me like 12 times a day, it feels like. And then, you pay for a news service and you don't get the news. Like, that's why you pay for the news service. It's sad. All right, I think I just missed this trade. Maybe a chance to put it on. The bottom of this zone was 20. I don't even have time to really put this in, but we'll do our best. I'm not just going to throw in a trade, though. I'm going to make sure everything's right. Right? There's always another opportunity right around the corner. So do not chase. Do not have FOMO. There's always another setup right around the corner. 36.29 was the top of the zone. ATR's got to be off the charts. Let's see. Yeah, 16.71. Great job. All right. So if I short this aggressively, 07 half, I can short. I could put on 2. I'll round up 07 and a half. Let's see if it already traded down there. That's not right, is it? It can't be right. That's right. All right, that's where I'll short it. So I'm being aggressive here because of the zone. Should wait for. Yeah, you know what? I'm gonna wait. I'm gonna wait for ATR retest it because it's not like, I'm not entering right in that zone. That zone's already failed. Right? It's one thing if it was like the ATR wasn't this big, and if this was happening up here, fine. But I'm not going to short aggressively here. If we do this, then I'm going to short. So especially not knowing what's going on, there's still whatever's happening right now. I have no idea. So what I will wait for is the full ATR. It's basically right around where I was going to short it, right? And there's your spot gamma levels too. If I see this, and then that, then I'm going to short it. If not, I'll just let it play out. For the reasons I said, and I don't know what the hell is hitting the market right now. So I'm just going to, any setups in here, you'd be well advised to play conservatively. That's the first time that's happened on the webinars where something major, we still don't know what happened. Let's see, maybe someone's telling me in my room.
Gold stocks stopped by GC, 200 contracts.
So again, about 40 things fired off here in these markets. So that was 300 stops. This is one big one big double whammy. Let's try to draw this. Again, this zone's going to be monstrous, and the ATR in here is 59.60. That's large. Probably one by one, but let's just see what this looks like. Because the sell ice came in, well, this is the first one. That's the first stop run. And then the second one was here. That was threshold. And then that sell ice came in behind it. So what we'll do is we'll draw this second one as a double whammy. That started here. Let me just change this color so it's not confusing. We may have totally missed a trade, and I'm fine with it because I don't know what's going on right now in the markets here. So, but you know, if we get this set up and we get in a conservative entry, I'll take it. So the stop run stopped there, but you can see the sell ice kept coming in, still coming in, still coming in, still coming in. Yeah, this zone's huge too. This is almost untradeable, guys, especially when we don't know what's happening. But you can see this one all the way up to here. You know, you got so many traders with FOMO, like, oh my God, I'm missing this big move. Who cares? There's another setup right around the corner. We don't know what's happening here, right? All you're asking for is to get your head ripped off. Right? I mean, I'll trade it, but it's not like I'm like rushing in here to trade this. Especially this zone is. This zone's not too bad. It's only 40 points wide, but all right, I'm gonna get rid of this, and we'll just trade off this most recent double whammy. I still haven't said what the news is.
No. I mean, well, I mean, Snake Eyes seems to be, he seems to be pretty tuned in here. This is all about the ECB. I do not see any news about it though.
Right. Well, the thing is, you know, yeah, large moves are usually news, not all the time, but the determining factor is when you see all the liquidity pull. When that means something's out on the wire. Right, and we saw that. So
Joe is, yeah, everyone's seems to be the people that are replying, Joe and Snake Eyes and others, that it's ECB.
So what did they say? What it is? Did they cut rates unexpectedly? Like, what did they do? Anybody know that?
Yeah.
That's the other thing too.
It doesn't matter, right? But
right, it doesn't matter. It's right. Let the market tell you what it thinks. Like,
right.
You get so many people that try to trade fundamentally, like, oh, that's bullish, I'm going to buy. Just let the market tell you if it's bullish. Let these setups tell you if it's bullish. You don't just jump in because you think it's bullish. You'll get killed.
Terminal,
right, so this guy,
terminal rate lower than expected. So that's what Joe is saying.
Pretty important information. You think we know by now. All right, so let's check NQ. We're above the yellow lug, so I could have gone long aggressively potentially, but we've obviously gotten an ATR below here. Now a retest failure, I could take a short. Again, I'm rolling the dice because good. Finally saying with it. So here's your retest. Hopefully my room is paying attention to this trade because again, this is one of the trades we're working on in here. So I'm waiting for a retest. So my retest, my rules for retest is 10% of an ATR. So meaning ATR right now is 60. So if it gets within 6 points of this, so 44, I consider that a retest, right? Just put the zone actually in the spreadsheet. 86. Top of it's 10, 9, 85, 75. Bottom is
I mean, the reactions are pretty classic stuff here. You know, that dollar is going to be cheaper, therefore people are going to pile into stocks. So also your emerging markets, your tech stocks should be flying right now.
Right. Hence the NASDAQ.
Yeah.
All that. Right, that's your ATR 60. So we didn't get quite, yeah, maybe we did. Yeah, probably. It's amazing how this comes right to there. What do we say, 44? Got it to 43. Let's see if that was the... No, this is actually, that's the ATR. So this was 10% on ATR. That's what this price is for our shorter term strategy we're working on. But that was 42. And we got literally right to 42. Hopefully my room took that trade because that was golden right there, even though it was rolling the dice, not knowing what's going on. But that was a retest, an official retest of the zone. Because I'm playing 10% of an ATR. That was a retest. So I could short this now. Let's see. So I obviously can only trade one guy. 10.883, we'll say 10.884. That's where I can short this. May have already, no, it didn't quite get down there. And the retest failure. So that's where I will short this market. I know it's a ton of risk, but I've now, my size reflects the risk, right? So it's the same, I'm risking the same amount, I just have to trade smaller. And so if I get filled on that, my stop's going to go ATR above this zone. So, and like I said, if you don't want to trade this right now, I would not blame you, because you're definitely rolling the dice. We still don't have an official comment on what it is. For my sweet news service, anyway. All right. I can't remember what we drew here. This was this. 58. We got an ATR above there. So the short was disqualified off of this setup, right? So I was looking to maybe short this as well in ES. We got an ATR above there. So I don't even know why I was saying I was going to go short aggressively anyway, because we did get an ATR above this volume setup. So now I'm just waiting for a new setup in here. So you can see, like, look at the difference here. You see where the news came in? It was like algos, liquidity, pulled, put back in. That is when whatever came out, came out. That's how you know something's coming out. If you see it turn black, there's something out. Always the last to know. All right. So we'll short NASDAQ at that price. Crude, there was a setup. I'll trade this as well. This was kind of not as crazy. This all came out at the same time, though. You guys heard everything was fine at the same time. This is 500 stops. Let's get this set up. Let's check our lugs.
Wow, 500 in crude. That's a lot.
Gold stock by GC, 178 contracts.
I'm not even looking at gold right now, but obviously that's fine enough. But this was
gold stock by GC, 276 contracts.
So this potentially would have been an aggressive short, because I know what above the yellow lug, I take shorts. I wait for my setups to go the conservative entry, meaning I need to see the full ATR, the retest of failure. But at the lugs, because they're so powerful with support and resistance, if I get a setup at the lug, I'll take it aggressively. So that meaning we're still in here, so I still could take this aggressively, so which I will do, right? Because we're still in the middle of this zone that happened at the red lug. This is just a pretty wide zone. So the bottom of the zone is 88.53. Excuse me. 88.82 is the top. In here is 38, not too crazy. All right, so for the position trading strategy, I could put on a 3-lot, again, risking the same amount, right, with this volatility. So this is over 100 ticks of risk, but again, I'm just adjusting my size. It doesn't matter. It's the same amount if you adjust based on your 2% of your account size. So I can get in 88.11. I can trade 3. I stop out at 89.24. I'm willing to short this aggressively because of or it'll be coming off. There's a stop run into the red lug. 88.11. I'll short that. I will go long as well, but the problem is I won't go long in this situation until we form new lugs. So if it's able to punch through this red lug, draw new lugs, and then I get like the setups here. If we get new lugs, I get ATR retest failure of this new setup, barring nothing else coming in, I'll go long off this setup. But I won't go long right now because we're so close to the red lug. But I know how powerful they are. Again, everything I talk about, there's discounts on my website, links to them. Just click on the banners. Ludwig levels are not on there. You just go to ludwiglevels.com. She's got a free 3-day trial. Say you saw it on the Bookmap webinar. You'll get that, and you get special pricing as well. You can try them out, and then if you decide to have them, use them, then you get special pricing, and also get special pricing as part of my trade room. But again, they're one of my main things I use to support and resistance. They're ridiculous, and again, when you can combine them with the Bookmap volume, it's the best edge I've ever seen in trading, by far. All right, so there's nothing going on here in ES as far as I'm just waiting for a new setup, and then I'll trade it. Crude, we're locked and loaded. I'm still long a couple in wheat, hasn't gotten up there yet. I never ended up drawing any zones in soybeans. I'm sure this was probably a nice winning trade as well, but it is what it is. I missed that. And we're still trying to figure out what the news is a half hour after it came out.
Yes, December.
So, guys, I'm sorry if I didn't get to your questions all in here. You can reach out to Scott directly. The email is in here. I'll put it in again, plus some other special links for Scott. Scott, we did put another poll in, and do you trade multiple markets like Scott? And most people are not. So if you wanted to make a comment on that, like, because it's this kind of iffy stuff. Like you want to get good at your one setup, you want to get good at your one market, and then you want to understand that setup in multiple markets. But I don't know if you have any advice for people on this subject.
Yeah, hold on a second. So something's coming out again.
151 contracts.
So he was just saying something.
December iceberg sell NQ.
This is nuts.
154 contracts.
And we just literally had 3,000 lot buy stops in ES for 30 plus points or 30 points. You had 1,100, another 1,000, another 1,200. And it's just not tradable right now, guys. I don't know what to tell you. I mean, you could throw something on. You're really rolling the dice, and you're asking. There's just no need, right? You just let this stuff play out, let it settle down. Setups will be there waiting. So this is disqualified, by the way, because we definitely got an ATR. Whatever just came out again. This is what I said. Like, I don't even know what the first story is. If you don't want to be trading right now, it's pretty highly advisable. Let the stuff settle down, and it'll go back to normal, and then you trade. Right? It sucks seeing these kind of moves. I'm well aware, but like, okay, you're buying, and then where's your stop? Like, say you did catch the news, where are you stopping out at? You putting your stop down here? Like, this is just a very rare occurrence, right? Where we just move here, almost 200 points straight up. This is going to be another important zone you want to watch. I will short this. I don't care what's coming into the market. I'll give this a shot if I get a short setup up here. I mean, this was from back here, but this is the first test of this. So these are really important. Even if you have a prior zone, this was selling tail, directional conviction. We gapped up from here, and then what did we do? We gapped down this day, and then we went right through this zone, retested.
158 contracts.
Wow. This is nuts.
706 contracts.
This is nuts. So anyway, 88 to 3,700, another important zone. I'm sure it's something about gamma level as well. If I get something up in that zone, I'm taking it aggressively based on my system and how we've been talking about. Like I said, if you don't want to trade right now, there's nothing wrong with it. You cannot trade because you have FOMO. If you like an area, like I said, up here, if I get a setup, I'll give it a shot. I know the risks I'm taking, right? Especially, I don't know what the hell's happening right now, but I'm willing to give that a shot. If you're willing, if you understand the risk, you can still trade it, right? But just don't be surprised if you get stopped out, right? Just because this is not an ordinary market at all. So just be aware of that. All right, so we're through the your Tom guy's time, so I'm gonna hop off. There really is nothing. I mean, I'm gonna just let this settle down basically, but there's just, stop run, ice. You can draw these zones, draw the most recent trade off of it. Again, I'd be very careful. We still have not gotten an official signal from my news service that I'm gonna contemplate changing. If we can't get this kind of information, it's pretty useless in my opinion. But when this settles down, which it will, then just go back to trading. Let this play out. But I will personally, for myself, I'm not telling you guys to do it, but this is an important zone, right? Very important zone. Yeah, that ripped right through it, touched it, and it'll be a 200-point straight move into that zone. You get a volume signal. If I get a volume signal here and it's bearish, I'm taking it, and I'm taking it aggressively. I don't care where we're at on the lugs. This is an exception. Again, this is a very outside day, but I will do that. So again, I'll still take the short in crude there, and wheat. Let's see if we got still long wheat. And my sell limits at the red lug.
December's top sell ES 514 contracts.
This is just nutty. So you can draw that zone as well. But sorry guys, I mean, I'm hoping to put on some equity trades for you today, but I can't control news stories that I still don't know what's hitting the market, right? So, but what you did see is I had everything lined up and it looked so good, and I said I can't wait to short in this zone, and I just didn't get my setup. There was no bearish setup, so I didn't take it. And guess what? I avoided that. Like I said, if you're staring at that, you're like, this is awesome place to short. Gap down, bottom of this balance, I am in, and you get your head ripped off, right? If you have the book map, the main information that you need, in my opinion, to trade, you stay away. You didn't touch that. You didn't touch that. There's just been no setups to short, right? So I say it all day, every day. It's the most important edge you can possibly have is real-time volume. And you just saw it real time there. You guys, you got to remember, if you're avoiding a loss, it's just like a win, because if you take a loss, you've got to have 2 wins to get back to where you were if you had the first win. You see what I'm saying? So avoiding a loss is just as good as a win, as anybody knows, I would think. So, all right, that's all I got, Bruce. Strange markets. Be careful. Be careful out there. It's Hill Street Blues, if you're old enough to know what that is. I knew Bruce did because he's old. He's Old Man River.
Yeah.
But
yeah. I was a little kid, but I do remember it. Okay, well, yeah, thanks, Scott. Thanks so much. Interesting markets. I love the way that you handled the volatility and your trade setups and everything. Great. This is just, it's really great advice. Or great to see how, a market veteran handles these things. So invaluable stuff.
right, again, I didn't put on any trades during all that, but that just shows you, like, sometimes that's the best course of action. You just sit and watch, and my setups didn't show me a short, so I didn't take anything. Let this settle down. I'm going to be right back at it.
Yeah, really great. So thanks, Scott. We'll see you next Thursday then.
Thanks, Bruce. Thanks, guys. See you later. Thanks.
Okay, bye.